Hello everybody, this is Demi with today's IC Markets commentary, where we'll be taking a look at some of the most popular assets to trade. I'm going to begin today with looking at Bitcoin. So I'm going to look at Bitcoin here on a higher time frame to identify what is going on right now, because there isn't a lot going on. And so what I've done is I've essentially looked at this from a technical analysis point of view, and what you can see that I've drawn in here is we have this channel resistance, and then here we have the channel support, and you can see here we had a little bit of a fake break and then we've gone back into the channel. We also have this diagonal resistance line that I've drawn in here, so it's kind of giving you that squeezing price action right now, and I think that volatility is going to slowly come back into this cryptocurrency. Which way? Well, at the moment it's undefined. Okay, there's not a lot that we can say apart from this, that the most recent big move was definitely on the downside, and since then we've basically just consolidated, almost just retracing, forming that kind of triangle wedge type pattern, and that could and normally will lead to a downward move. Okay, now that's still to be seen. So from a trading point of view, I'm going to just be looking at sideways range bound types of trades on the lower time frames, and once we get confirmation of which way we're going, then we can look at potentially more trend based setups. Okay, now the next one I want to look at is gold. Now gold, we've looked at a few times, and as you can see I've got a few indicators on that I want to share some insights on. And you can see there's not a lot going on at the moment on gold in terms of the higher time frames, but you can use these higher time frames to identify directional bias. And if you actually have a look at the RSI indicator, which is here, and this one over here, what I've noticed is, when the market goes to this oversold area around the 30 mark, the market starts to go up. So you can see here that happened, we've had a nice little trend, and then here this happened as well, we had a nice little trend, and even back here the market started a trend, and even back here. Now we're quite close to that, and so I was looking at this as an area where the market might get to and then bounce. Now the other thing that I looked at that was interesting is the ADX. Now the ADX basically measures the trend strength, and if you look down here, in fact let me just show you with the white line, you can see that this area down here represents an area which is a low point in terms of the trend. Okay, and what I noticed is that every time we got to this low point, the trend changes. So there's lots of examples, you can go and look at these yourself, but you can see like there and there, like if you look up, the trend changes basically, and we're getting very close to that low point together with this RSI. So what I'm looking for here on gold is a little move lower, maybe we find some support on this line somewhere there, and then I think there'll be a really nice opportunity to start trading gold up towards the top end of the channel and possibly even higher. Next I want to look at is the Kiwi. Now the Kiwi is in a really nice obvious channel, and what I've drawn in here is the channel support line here, which we've bounced off, and then we have this upper channel resistance line. I've also plotted here some Fibonacci levels. So here's the 38, here's the 15, here's the 618. I particularly like I like confluence areas. So the 50% is right where the 200 moving average is at the moment, and but the 618 is also probably the most common Fibonacci zone that everybody looks at. So I would be keen for this to carry on rallying, find some resistance up here, and then I think that could be a nice opportunity where the market may start to come back down again. Okay. Next, we're going to look at the Aussie dollar. So the Aussie dollar is very much at a historical low. You can see back in 2008 was one of the last times we were this low. And so I actually think that this is going to eventually turn around. If we zoom in right now, in terms of where we are, well, you can see that, this has just been channeling down. But we had some really strong buying recently. We've kind of created this squeezing price action here. I actually think, eventually we're going to break higher. So you can see it's finding some support here as well. So even though we're channeling down, I'm in favor of the bulls taking over at some point. If you want confirmation of that, a break of this channel line here is what you'd be looking for. Next, we have the S&P 500. So the S&P 500 is still very much in its bull trend, and it's formed this symmetrical triangle type pattern here where we're just taking a little bit of a break. So I'm quite keen to see it just build up some energy and then eventually go higher. So I think right now short-term trades in this range probably makes sense, and then if we can break through, then taking trend trades in that direction make a lot of sense. And then finally the Nasdaq here is, again, you can see we've been in a very strong uptrend, and right now we are just taking a bit of a sideways channel pattern there. You can see that we had this support trend line actually break that now becomes resistance right there. So right now I'm not too keen on buying until we break through here, and then what I'd like to see is a pullback, and then we can look for this to go higher. So a nice bullish candle, a pullback. I like the pullbacks into the 21 moving average here, or the 20 moving average, whichever one to use. They seem to work really well. Once the market really takes off, it does tend to pull back quite nicely and hog the 21 moving average here. But right now it's just kind of taking a break. So in essence, a break up and then a pullback into the 21 and then a move higher. Okay, so that completes today's market commentary. Hope you found that useful. We'll catch you again soon with another breakdown.